Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 13th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. It is CPI day, inflation data day here, coming out very soon, 1 hour prior to the RTH Open. We have developed a 2-day narrow range here ahead of that release of that data. We also have a very narrow pre-market range right now heading into the RTH Open. That's a 2-day narrow range right there, compression, with the potential of about 180 to 100 points easy, maybe 100 to 120 points of expansion up ahead. If we look at today's current range right now, just 34% of average range in a very narrow range as the market awaits inflation data. Keep in mind the previous session's midpoints here. If at the RTH Open we are beyond that level, we could be looking at bullish gaps up at the open that could lead to a bit of strength. Failure to hold the 2-day lows or a rejection here could open up a gap fill back down. So are we headed back to the previous month's high price, back toward 46.20, or do we fail here, fill the gap, and continue to trade in the middle portion of this range, 44.34 to 45.50? So again, keeping an eye on the 2-day range here today. Once we do see expansion from this 2-day range, or should we see expansion, we could see a great move, again, of about 100 points over the next couple of days. If we take a look here at the NQ, you'll see right here the NQ, similar development, 2-day narrow range here. The potential for 400 to 500 points on expansion from this range. We do have an uptrending market at the moment, but price continuing to trade right around the previous month's close price, not really showing much in the way of directional conviction away from that close just yet. Again, if at the RTH Open we are opening somewhere above the previous session's mid, those will be positive bullish gaps, and in that case we could be looking at a float to the upside. Any failure here to hold 2-day lows, and you start working your way toward a gap fill back down, and again you have your range that's developed here over recent trading, 15.7 down to about 15.175. All right, let's take a look here at crude oil. Crude with a narrow range here ahead of the RTH Open, 46% of average, but continuing to trend up. You got your breakout from the narrow range here. You have a big time push into the 89s. 89 is now exactly halfway through the next highest market structure. You had 84 up to 89, that's a +5. And then 89 up to 94 is another +5. So this thing has gone straight through on this expansion phase up. This transitional move has been very bullish. Any pullback, even as deep as 84, could still be bought for a continuation toward 94. So right now this market has done a tremendous job of seeing a full-on transition through 94s, which could, through 84s, which could open up 94s up above very shortly. So any pullback could be an opportunity to defend for bulls as this thing continues toward 94s up above. Looking at gold futures, this one has had a very slow approach toward the previous month's low after failing at the previous month's midpoint. Taking the previous month's close offered, breaking through the mid, opens up a previous low, but this thing has been very slow. And even last month here, it did fall short of the low before it. So there is precedent there in not needing to go get that low. Will it get it? If not, we snap back up to where we came from and continue to trade in this very, very compressed range that gold has been developing. All right, that is it for now. We'll see how this plays out here. Actually, let's take a look at the YM. Forgot about the YM. Let's not forget the YM here. If you take a look at the YM here, this one also has 2-day narrow range. A 3-day narrow range developing, but again, this is just ahead of inflation data. If we start to see expansion out of this 2-day range, we could be looking at a move that takes us at about 600 to 700 points of range over a 2-day expansion phase period. So if we break to the upside, it could be 2 days of strength that takes us, again, 600 to 700 points. If we fail here, again, from the breakout point high, we could be forecasting downward 600 to 700 points. Which way do we go? Again, right now, kind of right at the center of this range, right at the middle of the overall 2-day range. We'll see which way we go right out of the gate. But if there is a failure to the downside, we start to fill the gap with a potential to come back toward value and hit that 33,800 key level below. That's the level right now as we continue to hold just around 34.8. Are we headed back to 33.8, or do we give a shot back up to 35.8? So keep an eye on 34.8 as the market structure level as well. All right, that's it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.